Hello everyone, my name is Todd. I'm a trader and investor from the UK, and what a few months it's been. It's been absolutely tragic in terms of market conditions and what's going on in the world. This virus looming large as it is, it's quite shocking. I think most of it has been blown out of proportion, and I don't think the virus is as bad as everyone is making out. Well, it's sad, but it's bittersweet. We just ended the longest bull market in history of 11 years, and what a ride it's been for investing. It's just been astronomical. I mean, for example, the S&P grew by 338% in that time. We had the fourth worst day in stock market history for losses, which is absolutely mental. It's dating back to 1899, so you could say it's quite some time ago. I mean, I might not have even been around by this point. And last week put us at number 12 for worst losses. And this literally happened within, I think it was 3 days of each other. I mean, literally we had losses of about 30% across the board. That being said, there are so many people going, should we say, a bit cash heavy at the moment, selling off their stocks. And my question is, why? You don't really need to. At the end of the day, it's just you're going to miss out on some of the largest gains that you'll probably experience during your lifetime after this financial crash. I mean, considering the financial crash in 2008, look what happened then. The markets rallied. Now, most people that have clicked on this video will have no idea of what I'm talking about, and that's alright. You probably just saw a freaky looking bloke on a thumbnail and thought, yeah, I'll click that, he looks like Now that you know me, you can now trust me with your money. No, I'm only kidding, but you need to seriously watch out for the fraudsters out there that are going to try and rob your money. It's quite simply shocking, especially if you look on Instagram. You'll see people that look like me, or similar companies that will be trying to get you to invest in this time, and quite frankly there's a massive conflict of interest, and you don't want to be, should we say, thrown into that pool, because you'll quite literally get thrown into the bin, and you don't want that. First of all, what can I say? Stocks are in disarray, volume is in disarray, liquidity is in disarray, credit is in disarray, ETFs are in disarray. It's just a shambles. I think the markets need to close for a few weeks so we can actually see where we are after that, and we can actually ascertain the new conditions, because you should see the liquidity gaps. They are absolutely astronomical, and it's just getting people cut out all of the time. And a lot of people have been messaging me saying they've been losing a lot of money, and you know, what do you expect? You just have to take small gains in this time and get out. That's what I've been doing. That's what, should say, people around me have been doing, and it's proving we've had to adapt to the trading conditions because of how volatile it's been. It's a bit mental to think that globalism and bat soup have caused all this chaos. But all this being said, all this crisis and all this fear is now opportunity. And now you guys are here, you've subscribed, you've liked, and you can get involved in it, and we could all make money. Sounds pretty good, right? Now I know it's not that easy. Everyone's going to look at it, oh, it must be so easy for you. It's not, but the point of all this is, it's extremely risky, and you need to put correct stops in place, otherwise you will quite literally get shafted. I mean, if you come into a new relationship recently, you will have to tell them that gold might have a go on you every now and again, which it does me, I know that. I mean, how we can look at it is everything's on sale. It's like Poundland of the stock market. I love it, it's been fantastic for me. After financial crashes, there's some of the best money to be made on the way up. So this is the point, you just got to get involved. Okay, we'll use stocks as a financial example of yielding 10% in a year. So if you missed 10 days in a year of the best trading days actually in that trading year, you'll cut your profits in half. Some of the largest movements happen within them 10 days, and obviously people are probably thinking, yeah, but you must know the 10 days. Well, you don't. You just have to be in amongst it all, and that's why compounding, what I talk about all the time, is how you make your money. So let's say if you invest £10,000, if you leave that in the stock market and yield a 10% growth each year, again, that's just an example, and 10% is really easy if you have some sort of financial intelligence at all. I mean, any at all, 10% is a cinch, it really is. The actual growth of that over a 20-year period would be about £67,275, which people probably think over a 20-year period, that's not a lot, but I mean, it is a lot, and actually after you start going to over the 20-year period, bear in mind you haven't actually added into this, you'll be yielding a lot of money from your 10,000 initial investment. And if you miss the 10 days each year in that 20-year period, you will be left with about £33,637, 50p or something like that. It's quite literally half of that for doing the same thing. And I just think it's total insanity of why you don't want to get involved in yielding long term. The problem is everybody these days wants to get rich quick. And yeah, don't get me wrong, there are methods of doing so, but you have to be extremely lucky. I'm going to use like the lottery as an example. I don't think you do the lottery because I'm not interested in getting, like you say, rich quick, because I know that quick money is quickly lost. That's my opinion of it. I'd rather trade forever, invest, should we say, for my lifetime, and grow my portfolio over that and become wealthy. I'm not interested in the quick money because I know it'll be lost. So for some people like to put into savings ISAs, and which I think is a bit bizarre in my opinion, because you can yield, what is it, like 3% or something like that, and people think that's good because your current account might offer you 0.25 and it suddenly becomes an attractive offer. It's not an attractive offer, it's shocking, and you can literally put the money elsewhere, and there's certain forms of passive income. Let's use like a REIT, which is a real estate investment trust, for example, and that's quite literally passive income. A lot of people use rent, should say you buy a house and you rent it out, as a passive income format. It's not a passive income format because you're always dealing with shit from real estate agents and tenants and whatever. It's not total passive. Like for example, if you put it in a REIT, you're only giving the capital and you're getting an interest back. That's how that would work. This is quite funny, really. So you put, so we say, 10,000 into the ISA, and let's say if you missed the 10 days that I mentioned earlier in the video about the best 10 days in the stock market each year, it would take you 41 years of you putting that into your ISA to gain the same amount to that 33,000 figure, and it would take 65 years to yield to the 67,000 figure if you left it in there for the entire time. So 20 years, that's 65 or 41 best and worst case scenarios, and all you're doing is pretty much doing the same thing. Again, I'm using like a REIT as an example, but there's so many different formats that I personally, other people around me use to yield more than 10%. It's not hard, 3% is just a joke. In the next coming months, there's going to be some of the best opportunities to earn your money, as I mentioned, and I don't mind you guys dropping me a message or whatever. I'm not going to give you, should we say, financial guidance or whatever, because I know I can't, but I can sort of point you in the right direction of, should we say, options that you have to utilise your money better. As I said before, compound of interest is the key to gaining wealth long term. I think what people get, like you say, stuck on is buying expensive things when they don't need it. So let's say if you're 18 right now, you've just put £500 on, I don't know, a Gucci hat or something stupid like that. I don't think that people realise that if you invested the money, let's say if you were 18 and you invested that at 10%, over a 32-year period until you were 50, which everyone says 50-year-old. I don't personally think you are that old, if I'm honest. I mean, it'd be worth £10,500 roughly, so like 10.5k. And I just think, like, why would you buy that when it's worth so much more in the future and you can utilise your money so much better? Anyway, I hope you guys enjoyed this short little video. I I'm going to be uploading one very soon about what stocks I'm going to be investing in, what other formats I'm going to be investing in during this financial crash, because I know on the other side of it it's going to yield some huge gains. So if you want to stay involved in that, subscribe, like the video, and I'll see you guys soon. Goodbye.